Goldman is set to report its third quarter earnings tomorrow on Tuesday, and of course, various anonymous sources are talking in advance of the earnings release. Let's take a few minutes to review what the sources have to say. Good morning, everyone. It's Monday morning, so it's October 17th. Some news came out yesterday on Sunday, and then tomorrow Goldman is releasing its earnings on Tuesday. So this seemed like a perfect time to cover some of the news and what we might look forward to, or maybe not look forward to, concerning tomorrow's news and announcements that Goldman may be making. We see that trending is the question, Goldman Sachs in huge reshuffle? Well, are they? Well, let's see. LinkedIn tells us that Goldman is planning a significant reshuffle that would move its largest business into three divisions, the Wall Street Journal reports, citing anonymous sources. Gotta love those anonymous sources. The changes, which could be announced this week, would see the firm's structure resemble its peers, merging the company's investment banking and trading arms into one, asset and wealth management into another, including Marcus, its consumer banking arm, and the final unit would include transaction banking. Investors have long been skeptical about the bank's consumer arm, and the move appears to be an attempt by Chief Executive David Solomon to move its business onto safer ground. So maybe they'll talk about this tomorrow, maybe they won't. But, we had to go check out that scoop from the Wall Street Journal. And thank you, Andrew, for going ahead and posting that PDF so we could share it with other people. According to the Wall Street Journal, Goldman Sachs is reorganizing their Marcus by Goldman Sachs under their Asset and Wealth Management unit. Contrary to reports last week that they have been doing a rug pull on the robo-advisor with 13 million users and 100 billion in deposits after the consumer business lost 1.2 billion this year. All right, so that was a summary. Let's take a look at this little PDF of the Wall Street Journal. The article from Wall Street Journal is from yesterday, October 16th. Goldman Sachs plans sweeping reorganization combining investment banking and trading. Marcus, the Wall Street firm's consumer arm, to be part of a combined asset wealth business. Goldman Sachs plans to fold its biggest business into three divisions, undertaking one of the biggest reshuffles in the Wall Street firm's history. Goldman will combine its flagship investment banking and trading businesses into one unit while merging asset and wealth management into another, people familiar with the matter said. Marcus, Goldman's consumer banking arm, will be part of the asset and wealth management, the people said. This article is talking pretty confidently about information from these anonymous sources, so hopefully the anonymous sources know what they're talking about. I guess we'll see soon enough. The article continues, the third division will house transaction banking, the bank's portfolio of financial technology platforms, specialty lender GreenSky, and its ventures with Apple Inc. and General Motors Company, the people said. The reorganization could be announced within days, the people said. Goldman is scheduled to report third quarter earnings on Tuesday, so tomorrow. It's unclear how the makeover will shake up Goldman's senior leadership team, though at least a few executives will have new roles, the people said. Mark Nachman, don't come for me, Mark, I hope that's how you say your last name, the firm's co-head of trading, will slide over to help run the combined asset and wealth management arm, they said. The reorganization is the latest step in Chief Executive David Solomon's push to shift Goldman's center of gravity toward business that generates steady fees in any environment. It also reflects the firm's struggle to overcome skepticism from investors and even among some of its own executives over its ambitions for consumer banking. I hope this article tells us more about the skepticisms. They've had the consumer banking since, 2016? So it's been a while. They've had it for over 5 years. They've been growing it, and I guess there's still some skepticism. Let's see what the article continues to say. The firm's trading and investment banking acumen has been Goldman's calling card for decades, churning out massive profits when the markets favored risk takers and bold deals. But investors often discounted those successes, reasoning that they are harder to sustain when market conditions turn. And in recent years, Goldman has sought to sharpen its trading arm focus on client service. Following the changes, Goldman's organizational chart will look more like its peers. A slide presentation from Goldman's 2020 Investor Day offered a glimpse of what a combined banking and trading business would look like relative to peers. At Goldman, the merged group would have delivered a return on equity of 9.2% in 2019, besting Morgan Stanley and Bank of America Corp, but below what JP Morgan Chase & Co. and Citigroup Inc. earned that year. Bloomberg News earlier reported that Goldman had planned to restructure its consumer banking arm and was considering combining its asset and wealth management businesses. Goldman shares have struggled to keep pace with its rivals, at least by one measure. The firm traded at 0.9 times book value as of June, according to FactSet. That compared with 1.4 times at Morgan Stanley and 1.3 times at JP Morgan. Goldman has sought to narrow the gap by beefing up the businesses that command higher valuation on Wall Street, managing wealthy people's money and overseeing funds for pensions and other deep-pocketed institutions is more profitable than other financial services, and it usually doesn't put the firm's balance sheet at risk, as many investors view traditional consumer banking, taking deposits and making loans, as more predictable. Goldman has heavily invested in building its consumer bank, and folding the unit into its asset and wealth management arm should create more opportunities to offer banking services to wealthy individuals. Earlier this year, the bank said it aimed to bring in $10 billion in asset and wealth management fees by 2024. And that's the end of the Wall Street Journal article. That's not as juicy as I thought it would be. The anonymous sources have a lot of speculation for us, and maybe we'll see if some of their thoughts actually come to fruition when the earnings call is tomorrow for Goldman, or maybe they won't even address these speculations at all. We'll see. But it's still early in the day. I have things to do. You have things to do. Have a good day.